Back at 10:25 and we'll present the findings of the study. So I have the great honor of presenting the preliminary results for this year's study. The purpose of this study was not only to just identify and think about what are the big threats to the energy market, but also think about what could really disrupt the operation of the market. I mean, would the market always function? Do these new bilateral deals by the NOCs, could that break down sort of the smooth operation of the market? Do we have to worry about, those of us from the oil industry, you know, we don't always sit around thinking about what's happening on Wall Street, so that we have to actually worry about all the things that Dr. Feldstein talked about in the mortgage market. You know, could that come back to haunt the NYMEX and suddenly the NYMEX isn't functioning? So we really wanted to look at sort of what I call the colossal items. So not just the occasional blow up of a pipeline or the occasional Nigerian worker strike, but things that could really disrupt the market and cause a failure in the functioning of the markets. And we wanted to look at these issues like extreme co-movements. You know, does it matter that the dollar is falling? Does it matter that there's contagion in financial products across the international market? Does the large jump in oil prices affect any of those things, and if so, how? And then we wanted to think about, once we'd identified those risks and sort of laid them up, we wanted to think about what kind of policy frameworks are needed to fortify the current market system and make sure it really can respond flexibly, that it is more like what we saw in 1990 if we had some kind of a new major crisis, an additional crisis, not just a steady movement up in the price, but we had a sudden supply disruption. You know, what do we need to be doing to make sure that the markets will keep functioning? And then as we move forward on climate change policy, when we fashion those policies, do we have to worry about those policies coming about in such a way that it interferes with the smooth operation of the market and the clearing of prices? So that was sort of the big task that we set upon. And we picked a few very key big items to analyze. And I think that's because, you know, not only can you not do everything, but there are really some huge forces that people think of when they talked about, people call it the terror premium, but whatever you want to call it, the sort of speculative premium in the market. And so we tried to address specifically those items to sort of deconstruct them and think about, you know, how prominent are they, how likely are they, and then also what really would be the sort of scale of impact of these kinds of things. So we looked at sort of a politically motivated cutoff of oil of natural gas by a major producer. So in our case, we looked at Russia cutting off Europe. We have done some work looking at confrontations with Iran, how Iran's politics now sits in the Persian Gulf and what their relationships are today with the GCC countries. Also looking at Strait of Hormuz and whether the risks to Strait of Hormuz are more real or imagined. We have an expert here at Rice who has thought about and gone through all the literature of Al-Qaeda and looked at, you know, did they really have a shift in strategy to think of more soundly and more focusedly on oil, and what might that mean? Of course, we always have to consider the conflict in Iraq and the possibility of that spreading into a proxy war, sort of Lebanon style. And then we looked at this whole question, which of course we studied at length in the National Oil Company study, of, you know, what happens if a group of very large energy producers just fail to make the investments needed to meet future global demand, whether that's on purpose for geoeconomic or strategic reasons to make themselves more powerful in the global community, or whether that's just accidentally because of corruption or bureaucratic inefficiency and so forth. And then we also had to, in thinking about the U.S. Situation, you know, Hurricane Rita, Katrina really highlights the obvious, which is that we're so busy doing all these geopolitical analysis of what if the major disruption comes from a storm-based event in the Gulf of Mexico. What kind of resilience and policy measures do we need to sort of bounce back from something like that? So it took us fairly across the globe. We had to look at the gasoline market in the United States. We had to look at the gas market in Europe. We had to think about political relationships in the Persian Gulf. So it's a pretty comprehensive study. It's a little harder to make the study hang together in a sort of synthetic way than maybe other topics because some of the risks are so diverse. But one of the interesting things, I think the most surprising thing that we found in looking at all these risks is we took each risk individually and try to weigh the probability and the kind of work that's been done on the probability of all of these events and what their outcomes would be. What we found that many of the risks that are driving today's oil price premium actually are probably less catastrophic than they seem at first glance. That the sort of net effect of those attempts might really not be something that would disrupt markets' abilities to respond. And then actually, and I think you'll find over the course of presentations over the course of the day, quite surprisingly, that a lot of the factors that started in 2003, the sort of speculative bubble of, oh my God, have actually lessened in the past year or so. We're seeing a lot of improvement in some of these variables, and the market hasn't quite registered the fact that some of these risks have actually been going down. And so I think that that's also sort of an interesting thing to think about. Now, those risks that we're all focused on, what I call the terror premium risks, have gone down, but hastening back to Dr. Feldstein's talk, one of the problems is that some of the other risks that we're probably not watching as closely in the oil industry, like the mortgage crisis, really could be a very big and extreme risk to the energy market. And so I think our opinion probably is that that is an area where the oil sector needs to put a lot more attention in thinking about what those risks are and how they might affect the business. We think that that's maybe a higher grade risk than the risk of Al-Qaeda or the risk of Iran. Not to downplay those risks, but just, what's more immediate, what might hit us, in the face a lot harder could wind up being those financial risks. So one of the, and people will be giving sort of more elaborate, detailed presentations on each of the subjects, but just to give you sort of a little overview to sort of organize your thoughts as you sit for the day. So we looked at different scenarios, and one of the scenarios we did in our natural gas model was looking at what would happen if, suppose Medvedev just gets really crazed and he decides that he doesn't like the election result in Germany or some other thing, and they decide to actually cut Europe off for 6 months. And so our researchers will talk to you about how they created that impression of the simulation. But I think that this table sort of sums it up in the sense that there is that giant line going up in 2009 when we have the Russians cut their supply. But the interesting thing about the market and the resiliency of the LNG market is that that price shock doesn't last for a long period of time. And then, as I'll show you in the next slide, the party that gets hurt over the long term is not necessarily the EU. The party that gets hurt the most over the following decade is the Russians, who wind up losing a tremendous amount of market share as a result. And so it's a very interesting outcome because it's, again, not in the sort of expectation path when people think about the high geopolitical risk of Russia's new, more aggressive policy, in thinking about whether that would cause a war or a response that would be other than the market adjusting. Again, when we modeled it, we did not come away with thinking of that as being a major trigger that would break down the international system. If you think about the experience of 1973 and 79, the industrial world, and I think I agree with Dr. Feldstein, the US economy and the European economies have a lot more resiliency than maybe people think when they think about an event like that happening. And we feel that in the gas market, the market can correct and adjust. The next thing we looked at is the sort of so-called threat of Iran. And there's a very elaborate paper that goes into everything. I would say that, quite frankly, I disagree with some of the assessments that were talked about this morning with Iran. Their economy is very, very hurting. The problems in their energy sector are worsening, so much so that my understanding is there are Iranian cargoes of oil unsold on the water because they can't process it themselves. And I know that this is Amy Jaffe's interpretation. I understand that people said, oh, the Saudis didn't really increase production, but by giving more oil to customers, it meant that the Iranians had more difficulty getting rid of this extra inventory that they had. So there is this pressure on Iran. The gasoline purchases are draining the treasury again. They are having trouble managing their natural gas sector. They had terrible energy shortages this winter. The sanctions have pinched them in terms of their ability to do banking internationally, pinched them a lot. And as a result, and this is to me, again, ameliorating what we see as this giant risk of Iran, which is Iranians went to the polls and they voted against the populace. They said, hey, I don't want to be sitting in the dark. I don't like the way you're managing the government. We don't want sanctions on us. And they voted more favorably toward, mostly towards the conservatives, but also with the reformists. And we're seeing a rapprochement between those two groups. And so we're seeing sort of a changing political background in Iran, which, we've said that before, and sometimes it doesn't matter, but it really does lay a very interesting backdrop for a change in U.S. government, for our elections, and for the possibility of having a sort of a different choice path. Also, when we looked at the different research on Strait of Hormuz, and looking back on the experience of the tanker war and other things, there's a lot of conversation about the swarming ability of the Iranian speedboats. And still, in all the groups that have analyzed it, have still found that it would be very, very difficult for the Iranians to completely close Hormuz. And of course, since the last few years, the GCC have put in a lot more bypass capacity. So again, we're not saying that that wouldn't cause the price of oil to go up tremendously high for some period of time, but then when the market would see that ships were getting through, or that it was a little harder for the Iranians to just keep blowing up tankers, again, I think that maybe that risk is not quite as bad as people might think when you first hear it and think about it. We're also looked at the writings of Al-Qaeda. It is definitely true that, sort of coinciding with the 2003, 2004, when the oil price started to really take off, that was the same time Al-Qaeda refocused on how, oil was a legitimate target. During the Gulf War and in sort of in the intervening period, there'd been this sort of thought that the Muslim fundamentalist movement was going to be able to assert itself in the oil-producing countries, and therefore they wanted the oil for themselves, to be there to help for their new societies. I think that sort of post-Afghanistan, there was this realization that the enemies of Islam justified the destruction of oil facilities in the Middle East by any means. You see a lot of, as one of our presenters will talk about in a little bit, a lot of the literature moved towards enjoining the faithful to attack oil and gas facilities. We saw sort of the flopped attempt on Abqaiq in 2006. But one of the things that's happened, besides the Saudis completely expanding their security apparatus around that facility, is that Al-Qaeda is functioning in this more autonomous way. And that, of course, makes it much more difficult to pick a giant oil target and be successful, because that takes a lot of coordination and intervention. And so, again, while I think it's more likely in the sense that those kinds of targets are more likely to be selected, the operational strength of the organization to do something on an international scale is probably reduced. Then we come to this question of contagion. Now, I think we cannot understate the amount to which one market affects another market today in the financial markets. And we have this sort of feed loop where the more the dollar goes down, the more justified OPEC feels in raising the price to compensate for the fact that the dollar went down. The more the U.S. trade deficit goes up, and the more asset bubbles we have as petrodollars flood back into the market to find some outlet. And then, the whole process reinforces itself. And when you go back and look at what happened in the 1970s, going back and thinking about the fact that it was not to say that the oil crisis caused the Bretton Woods gold standard to go down the drain, but there was a coincidence of events that look very similar to today. And so there is reasons to think about the interrelationship between the magnification of financial crisis because of our high dependence on oil and the volatility in the price. And we've been here before. So I was recently on television with one of the people who believes we've run out of oil. And I mentioned in passing on this television show that this is a cycle we've seen before, and that unfortunately, unlike what we could do today, which is to have very good energy policy, and maybe end the cycle forever, that typically the way we get out of this problem is we have a major recession. And that brings the market back into balance, and that my guess is we'll probably have the same thing happen again, and it'll be a little bit shocking again for the subscribers of Texas Monthly Magazine and the Persian Gulf. And after the show, when the microphones were off, this person turned to me very bitterly and said, "You don't get it." And I thought, no, you don't get it, right? And so here's my chart going back, which Dr. Al-Gamal will go into more detail, going back all the way to the 1850s to show you that we're not in a new problem. We're in an old problem that could be much worse today because of the speed and rapidity to which markets respond to cataclysmic financial events. So, we have come up with what we think is a new definition for energy security. We feel that the threats to what we think of as energy security have moved around. Given the sort of muscle flexing by the energy producing states, we think that now countries are seeking to reduce their vulnerability to the reduction or a cutoff by someone else. Here in the United States, we think oil. In Europe, people think natural gas. But the solution is not just to lower the oil intensity of one's economy, which has been the thing that's been touted as having gotten us to this point, that oil did not affect us, the oil price rise so much because we take so much less oil to produce a unit of GDP, but also thinking about how to have our industry and our transportation system be more flexible. Right? And one of the things we've learned in the electricity sector is that the fact that we use so many different fuels to generate electricity here and in a country like Japan, that if you have a disruption with any one fuel, you can move up your base load production in another fuel or have substitutability either in capacity or in fuel switching. We don't have any flexibility of that kind in the transportation system. That's our one weak spot in terms of making adjustments to changes in market supply. So good area for thought in the future. I didn't jump over that. So the last thing we felt that we had to treat is this common view. Maybe not common here in Houston, but common view elsewhere, that energy security and climate security are two sides of the same coin, to quote former Prime Minister Tony Blair. And we would say for the United States, that's not really the case. If you look at the baseload supply in the United States, there are some things where that is true. Obviously, any increase we can have in energy efficiency, programs to stimulate the use of renewable energy, of course, get us where we want to go. But a lot of the policies that we're going to be looking at, so for example, limiting the use of coal or taxing CO2, are going to affect the very supply that we're going to be counting on that's not from the Middle East. This is an IEA chart, and the way I explain it to people is this is already an incredibly large bar, and in my opinion, very unrealistic. In other words, the idea, if you think about what's going on in the Middle East today and what's happening in NOCs today, especially in Iran, but also, given the difficulty it's taken to sort of rebuild in Iraq, the chances of this bar coming online in that size is very slim. And then if you take this red bar, which is basically tar sands and shale and upgraded heavy oil, all of which would be affected by carbon legislation, and you shrink it down, then that makes the pressure on this bar even greater. So again, and that's especially true in North America, where we have giant resources in tar sands and oil shale. And so I'm not saying we shouldn't make a commitment to it. I'm just saying to people that making a commitment to it is not going to affect our energy security is incorrect. And we need to understand what the trade-off issues are and either price them or build them into the policy system in such a way that we don't make the energy market unable to respond to some of the risks that I've talked about before. That's sort of doubly true in thinking about coal, where greater use of coal is going to put more pressure on our need for imported LNG from the Middle East. And so we're going to wind up, right now our electricity system, the fuels in our electricity system are really not tied at all to what happens in the Middle East, but that could change in the future as we move off of coal. So when you think about sort of the future interaction of the climate and security question on the policy side, that comes to what everybody likes to say, whether you're Hillary Clinton or President Bush or John McCain, everybody likes to focus on this technology innovation because it sounds easy and it won't cost anybody anything. I mean, it's definitely a solution. The question is, how fast can we develop these technologies and get them into the market? When I give talks internationally a lot, as you all know, and I have found that when I go out to the Middle East or even to Europe, and I explain that U.S. policy on climate is changing, that if you look at the candidates' positions, they're completely different than 4 years ago in the election cycle, and I start trying to explain about the low-carbon fuel standard, which could hit all sellers of gasoline in the United States, including foreign sellers of gasoline. People just glaze over and say, oh, I shouldn't understand what she's talking about. And so we keep making chart after chart to show that, the political reality of this policy is coming. And it's really going to, change the shape of the energy world, both in the United States and globally. And where we think the focus is going to be first and foremost is going to be in the automobile sector, right? State of California has sort of drawn that line. If you look at the trend in Congress, it's moving again towards that line. That was the one thing the 2007 Congress could agree on. If you look at what happens if you get the same kind of movement in China and India, which we're starting to actually see the outlines of in China in terms of popular perception, polling, and even Chinese government policy. So to promote what we do next, our next year's study is going to look at some of these issues and their impact on energy markets, both new U.S. regulations, carbon trading schemes, and so forth, and then also scenarios for China, because we think that's going to be really critical when I understand the IEA, I was at OTC, and they have this wonderful presentation that just shows demand's going to go up there forever, and nothing is going to change that because they're subsidizing their energy price. And, it's going to be a very complicated picture, the demand picture moving forward when we start moving into some of this climate regulation. But we don't discount the transportation launching point. If you've been to China and you think about how many people would like to have a personal automobile, it's kind of daunting. We have a nice paper in this study on the gasoline market in the United States, and Ken Metlock and I have pointed out on every radio show we've been on for the last 2 months that there are something like 250 million cars on the road in the United States and 13 million cars on the road in China. And so to say that the Chinese automobile, middle class attaining automobiles is the real problem driving the price of gasoline today is not terribly accurate when you consider how much more utilization we have for the average American. And the United States uses 33% of all international road fuel. So what happens in our policies is a pivotal impact on the future development of the energy market. I'm not saying China is not important. We think China is important, but what happens here is going to be really dramatically important. And we're seeing all these policy tools coming into play in the United States. All of these things have, congestion charge in New York City got knocked down, but may eventually resurface. I mean, many of these policies have either been passed in the last year, and all the political candidates are talking about why those policies should be strengthened, not the other way around. And the impact that they could have on the oil market, maybe the 35 miles to the gallon standard is going to shave something like 2.3 million barrels a day off of demand when you get out to 2020 if people don't raise the rate at which they buy a new car. In other words, if we just stay the way we are and people retire their car when they would have, in other words, the price doesn't scare them into getting a smaller car. That's still a lot of oil, but if you look at what would happen if we got to 2015 and through a very aggressive policy, maybe through a new president, every car in America started getting 50 miles to the gallon. If you look at Nissan's announcement about electric cars or some of the other technologies that people are putting forward, then you're talking about a savings of 6 to 7 million barrels a day. You're talking about a really critical difference in change in the outlook for demand that we're all used to quoting for 2030. You're talking about a completely different profile. So, my closing remarks, no, energy security and climate security are not always two sides of the same coin. To the extent that policymakers are going to want to focus on them being two sides of the same coin, the focus is going to be on efficiency, both in the transportation sector and in other sectors. We are a believer that high prices can induce rapid change. We understand it doesn't seem that way right now, and there are a lot of analysts out there telling you that demand is going to go up forever and it doesn't matter what the price is. I guess we're a gravity-based program, and we're just not convinced by that argument. And as you listen to the different studies, I think, over the course of the day today, I think you'll get a sense of why we feel things are changing. And the market hasn't really recognized some of the things that have changed, both geopolitically and in sort of what might wind up being the long-term trend line for demand. So with that, I thank you, and I'm going to introduce our next speaker. So we move ahead at our programs. We're running a little bit behind. Dr. Mahmoud Al-Gamal is a Rice Scholar here at the Baker Institute, and he is a professor of economic and statistics in the economics department here at Rice. He holds our endowed chair in Islamic economics, finance and management. He comes to us from a variety of other universities, and he was also an economist in the Middle East Department of the International Monetary Fund. So when he starts telling you about the petrodollar cycle, you need to take him very seriously. Thank you very much. Dr. Mahmoud?
Thank you, Amy. Actually, I'm told by the IMF now that we no longer talk about petrodollar cycles. I guess we do in this study, but the IMF no longer does. I'll try to be brief since the program says I'm already done. I think we can provide value by telling you that there's very little that we're saying in this paper, and even less that is new. But if we provide value, maybe we'll convince you to read this book by the late, great Charles Kindleberger. The front cover of the 5th edition has a quote by the other great economist, Paul Samuelson, that says, "Sometime in the next 5 years, you may kick yourself for not reading and rereading Kindleberger's Manias, Panics, and Crashes." And I don't know when that quotation was taken or printed, but I think it's as true now as it was whenever Samuelson said it. So our story is an old one, and it's a painfully simple historical story that is so simple and so obvious that we tend to forget it. There is a secular cycle in oil prices. There is a secular business cycle, and there is a lag in construction of new oil production and refining facilities, and therefore there is a cycle in oil prices as well. The swings of the cycle at times are amplified and feed back into financial crises. So if we're at a time when there is a debt-driven crisis and we happen to have a lot of petrodollars sloshing around, that's going to amplify the cycle, and we've seen it before and we're seeing it now. In addition, geopolitical events tend to happen when there's so much money flowing around, so many states trying to assert their power in various parts of the world. And they may cause these swings that are being amplified by financial considerations to become even more critical. And we tend to focus on these, but our argument is actually those geopolitical events are just catalysts that bring about change that was brewing anyway because of financial conditions that we're living in. And so the current bubble, the way we see it, is driven by the lax financial regulation and the lack of a international financial system that instills discipline in whichever countries are controlling that financial system. And we'll get to that in a second. The solutions are obvious. They're as old as the 19th century. We know what they are. Everybody knows what they are. The question is whether or not you can muster the political will and be able to sustain it through the political business cycle, to take the bitter medicine when you need to, and hopefully we'll end with that. So the first thing to say is that the story today is not all about China. It used to be around 2003 that people were talking mostly about Chinese investment of their trade surpluses, driving our bond prices higher and therefore making our long-term interest rates lower, which obviously fed into the housing mortgage bubble. But it's not all about China. There's as much of a petrodollar problem today as there is of a Chinese outflow. So if you look only at the capital account outflows from just Saudi Arabia and Kuwait and compare it to the outflows from China, they're roughly of the same order of magnitude. If you take into account that you also had all the backflows that happened in the 1970s and up to the early 80s that are still being reinvested in the international markets, the total volume of petrodollars, historically speaking, is just as important in understanding the overall credit boom slash bubble that ensued. The cycle we're just showing here post-Bretton Woods, so starting in 1971, and we'll get back to focusing on post-Bretton Woods, basically the decoupling of the dollar from gold by President Nixon in 1971. But even looking at such a short time span, you can see the business cycle, the ups and downs of global GDP growth and compare it to the growth in oil demand, and the relationship is obviously very, very stable. Now, this is a picture that Amy has already shown. And if you, what this shows is the price of a barrel of oil in constant 2006 prices, and this is a series we got from BP. one may actually have an issue with the particular deflator that is used here. And so one may wonder whether really the 1970s crisis would be seen as so much bigger than what we're living in now, et cetera. And we'll show you a different way of deflating the same series. But if we take this at face value, and you go for all these big jumps in real oil prices, they coincide with periods of financial crises. At times, they were both currency and banking crises, mainly in Europe, some in the US, back in the 1850s. And of course, if you think that you're in 1870, then England would be the US and Germany would be India and China, and we'd be telling the same story. Right? Manufacturing has gone somewhere else. These are the fast-growing economies. They're changing the flow of financial resources, and the pound may not survive as the ultimate currency in the world. And it's in that sense that we're back where we started. And when we look at especially what happened in the 1970s, because that's a more familiar story, most of us were alive then. Let's plot now nominal oil prices against gold prices. And some people may take an issue with why you choose gold. Well, it makes sense to choose gold because if you go back before 1971, under Bretton Woods, the US dollar was tied to gold. And if you go even further back, you would have a gold standard that started in the 1880s, basically to get out of that series of financial manias followed by crashes and the very high oil prices. So what we see basically in the gold series is a very good reflection of what's happening to the US dollar. Once the US dollar was decoupled from gold in 1971, there is a series of what one might call debasement of the US dollar, to which every now and then the oil producers, whose main lifeblood is oil that is priced in dollars, react every now and then, especially at times when there is a geopolitical catalyst to allow them to make oil prices basically try to catch up with the real value that they were getting before. And then, of course, as happens with all commodities, you overshoot. And then you have a period when the dollar keeps going down again, and now you're back worse off than you were before, and then another geopolitical catalyst would happen. So say you'd have 73, the Arab-Israeli war, and then you have 79, the Iranian Revolution. And in both cases, if you look at how oil prices were doing relative to gold, oil is basically not keeping up with other commodities, and then the catalyst comes, and then oil responds. You see it even more clearly if you were to plot the gold price of oil. So look at how many carats of gold it takes to buy a barrel of oil. And you would see basically once the US in 1971 starts on a period of depreciations of the dollar, or as some would say, debasement of the dollar, you have the real value of oil as measured by gold going down, down, down until 1973, then you have a big jump. Again, it happens in 1979. Every time there's a big jump, it is preceded by a period where the real price of oil was actually going down, and then there is a big correction. And President Bush was just in Saudi Arabia asking the Saudis to cooperate and increase their production in order to bring down the price of oil. And the Saudis didn't say it in those words, but basically their point was, this is a cycle. Where were you back in the mid-1990s when we were suffering because of the low price of oil? And why weren't you increasing your demand in order to bring the price up? If it's a cycle and we have to suffer when the price is low, then somebody has to suffer when the price is high. That seems like a salient argument that needs to be addressed in the long term. Of course, from the US's point of view, the ultimate question is, well, is oil going to be priced at this level? And the argument we're going to make, and the technology argument Amy was pointing out, is actually very important because it changes the long-term view of what the price of oil would be. And it's just very basic resource economics. If you think that in the future you'll be able to sell it at a high price, why on earth should you pull it out of the earth now and sell it for less? Okay. Now, why is the dollar going down? Well, Professor Feldstein mentioned earlier, the US starting in the late 1960s and then accelerated in the last decade, its trade deficits with the rest of the world, accumulation of dollar-denominated debts And for as long as people were accepting the Bretton Woods paradigm to hold dollars, even though dollars were not tied to anything anymore, the US was basically writing free IOUs. And how long can you continue to do that without somebody saying, well, yes, the federal government has not defaulted in the past, but isn't debasing your currency when I'm holding it sort of like a mini default? I mean, Charles de Gaulle said it so many years ago. So the solutions are obvious. Stop inflation before it materializes. Professor Feldstein's prescription, if I understood it correctly, was let's deal with the housing crisis first, then raise interest rates in order to curb inflation. He's absolutely right that inflation is a second thought in Washington today. But who's to say that by the time you deal with the housing crisis, there isn't another crisis that we have to deal with before we raise interest rates, and then another, and then another, and then another, and the bubble just gets bigger and bigger and bigger. Now, if it crashes, what would happen? Well, probably what would happen is that we'd be back to a crisis of the magnitude that required Bretton Woods, the between wars crisis with protectionism and so on. We're already hearing a lot of energy protectionism talk, of trade protectionism talk, and of financial protectionism talk. So basically, a central banker with the resolve of Paul Volcker who says, look, I raise interest rates, I don't care what happens, my job is to curb inflation, to make sure that inflation expectations don't run amok. A gradual transition from the dollar system is probably called for. It was, again, Paul Volcker was quoted in one book recently saying that he was surprised that people were more willing to hold dollars that weren't backed by anything than they were willing to hold dollars that were backed by gold. Well, that continued for as long as the rest of the world was allowing us to write free IOUs. The long-term solution would have to be some Bretton Woods 3. Bretton Woods 2 is a term that was coined by some US economists suggesting that the 2003 regime where basically China agrees to recycle its trade surpluses by buying US bonds was a way to keep the dollar afloat. But Bretton Woods is broken now, we know that. So we need the Bretton Woods 3, and probably it seems like Akin Green and many others who've worked on this problem for a long time are suggesting that maybe we need to go to a multi-currency system where there is a system of international checks and balances so no country can ensure that it keeps staying out of recession by basically debasing its currency and making others pay for it. Reduction of dependence on hydrocarbon fuels and the environmental dividends that would come with it, as the Blair quote that Amy showed, is an obvious solution. And it would be very important to be credible in having a sustained program that says, look, in the long term, this oil will be worthless, so you're better off selling it now. Otherwise, the natural reaction has to be, that's what resource economics tells us, has to be, you keep it in the ground for as long as you think that there is this growth. Investors, of course, if they're buying oil futures, they're betting on two things. That global growth will continue and the dollar will go down. This is sort of a joint. For as long as the dollar is going down, oil will go up, and for as long as demand is growing, oil will go up. So if you change the demand part of the formula, then the demand part will have to decline, and also on the supply side, there's no point in keeping this stuff in the ground if in 50 years you're not going to be selling as much as you think today. In order to stop the international flows of petrodollars and Asian dollars that are feeding one bubble after the other, tech stock bubble, housing bubble, and now commodities bubble, basically what we need is simultaneously for, well, let me do both, we need simultaneously for the countries that are now relying so much on exports, whether it's exports of raw materials or exports of manufactured products, to be less reliant on exports, to be more like us, if you will, to start basically increasing their own absorptive capacities. But that would also require simultaneously that the US increase its own savings in order to be less reliant on foreign savings, so that this imbalance in the currency markets can be adjusted. In the Middle East, I guess we have a whole series of talks later on geopolitics, so maybe we'll keep our thoughts about geopolitics to ourselves and leave that to the other papers. Thank you.
Any questions? Okay. Okay, we're going to skip order slightly because we have a presenter who has an airplane to catch later in the day. So the next speaker that I'm going to introduce, but of course I forgot my book with everybody's bio, is is Professor David Cook, is going to present his work on terrorism and oil. David Cook is the Associate Professor for Religious Studies here at Rice, specializing in Islam. His undergraduate degree is from Hebrew University of Jerusalem and his PhD from University of Chicago. Big year to come out with a degree in Middle Eastern Studies in 2001. He has published numerous books to excellent academic reviews and has worked on contemporary Muslim apocalyptic literature. We joke here at Rice that David had done his dissertation for his PhD on the concept of jihad in Islam, thinking that he would be a medievalist and work at a university. And the next thing he knew, the Pentagon was calling to ask him to give a lecture on the concept of jihad. And he was traveling around the world analyzing suicide bombing literature. So anyway, we look forward to his presentation today.
First of all, we have to talk a little bit about definitions. It's so oftentimes heard, and even by Amy here, that when we speak about terrorist attacks, we're speaking about Al-Qaeda. I have an unfortunate comment to make about that, and that's the growing consensus among terrorism scholars that really Al-Qaeda is practically speaking irrelevant. And this is very unfortunate, if only just because we always long for having one convenient enemy so that we can speak about that particular group and be done with it. So I'm afraid I'm going to have to complicate our lives by speaking about Al-Qaeda and its ideological affiliates rather than simply Al-Qaeda, and have to concentrate on the fact that Al-Qaeda, as it was in 2001, basically is no longer, and from all practical purposes is not that relevant in terms of terrorism attacks. Now, Al-Qaeda's goals, or Al-Qaeda and its ideological affiliates' goals, are fairly simple. They involve the coalescing of the Muslim world into a single Muslim state under the rule of a caliph, and involve a radical change in the Muslim political and religious structure that can only be effected by a complete revolution pretty much throughout the Muslim world. Now, in order to do that, the slogan that was adopted by Osama bin Laden back in the middle 1990s was expel the Jews and Christians from the Arabian Peninsula. In other words, the organization as it originally came together was basically one that focused upon Saudi Arabia as being the paradigmatic Muslim country. It was very Saudi Arabian and Egyptian based as an organization, and it focused upon that idea that that United States troops or Allied troops were actually occupying the country. Now, it's easy to see that this is a goal that would require a long-term revolution, a long-term guerrilla-scale attack, and that was not actually forthcoming in the 1990s. As a matter of fact, it was not forthcoming until 2003. And so Al-Qaeda as an organization sought to, what we would say in Marxian terms, to spark the masses, to wake up the Muslim masses that it saw as being asleep by carrying out spectacular attacks and making broad-scale media pronouncements. Now, until 2003, really very few of those focused upon the oil industry. We'll come back to some of the paradigmatic attacks shortly, but as Amy already noted, basically when you look at the pronouncements, certainly from 2000 onwards until 2003, very few of them actually mention the oil industry as in a state of prominence. Almost always it's rather subdued, usually down in the list of their demands quite considerably. Now that gradually began to change. As I said, in 2003, the Saudi Arabian branch of Al-Qaeda began what we could call a low-scale guerrilla revolt. There was some amount of popular support within the kingdom for the goals of Al-Qaeda, and for a time, the Al-Qaeda branch was able to actually carry out some rather spectacular operations. Now, it's worthy of note that because Al-Qaeda presented its goals actually in the form of an online journal called Untitled Jihad that ran between 2003 and 2005 when it was finally suppressed, actually the initial issues of Untitled Jihad don't even mention the oil industry at all. And it isn't until 2004, actually a year after the beginning of this revolt, that they start to talk about the oil industry. At that particular point, we find a pronouncement by Osama bin Laden that he speaks about. He says on December 16th, 2004, he says, "Mujahideen, be patient and think of the hereafter. For this path in life requires sacrifices, maybe with your life." Now, this particular pronouncement where he talks about the price of oil at that time saying $40 a barrel, it says it should be $100 a barrel at the very least. So keep on struggling and do not make it easy for them and focus your operations on it, especially in Iraq and the Gulf, for that will be the death of them, unquote. Focuses upon the development and the close association of attacks against the oil industry with suicide attacks. In other words, these particular attacks that Osama bin Laden was calling for were going to invariably be of a suicidal nature. Now, I'll just kind of summarize briefly the paradigmatic attacks against the oil industry that I focused upon in my study. The first one is the suicide attack on the French supertanker Limburg near the Yemen on October 6, 2002. This was part of a series of attacks that happened actually around that particular time, including the Bali suicide attacks and several others in the Kuwait. The second one is attacks by Saudi radicals in Yanbu on May 1st, 2004, and Khobar on May 29th, 2004. Those were really the first major attacks that you found by Al-Qaeda in Saudi Arabia against the oil industry. There was, in 2005, in January, an attempted attack by a Kuwaiti cell. There were attempted attacks, as Amy alluded to, against Abu Qaik refinery facility on February 24th, 2006, which we'll come back to shortly. And suicide attacks on oil refineries and storage facilities in the Yemen on September 15th, 2006, and attacks against oil refineries in the Yemen also on November 8th, 2007. So, from a practical point of view, every single one of those attacks was basically suicidal. It raises the question of what precisely is the goal of the organization. As Amy alluded to, it's very clear from watching the pronouncements of Al-Qaeda and its affiliates that there's been a gradual change from actually taking the oil industry on behalf of the Muslim community for a future Islamic state, and this gradual change that happens approximately in 2004 to destroying it, denying it to any possible enemies. So that shift has not been accompanied by any great popularity. None of these attacks command very popular support and are usually seen as desperation attempts by Al-Qaeda in Saudi Arabia. Let's talk briefly about the types of strategies that we can expect from the changing Al-Qaeda, the collapse of the central organization and its kind of farming out into numerous smaller ideological affiliates. Amy mentioned the figure of Abu Musab as-Suri. This is a very interesting figure who's recently been the subject of a book, Abu Musab as-Suri, Architect of Global Islamic Revolution. His best-known work is actually still on the internet, A Call to Worldwide Islamic Revolution. This is a Syrian thinker who has been able to span quite a number of the different groups that constitute radical Islam during the last 20 years. And as the culmination of his thought, produced this magnum opus, this 1,650 page book that, if you can get through it, gives you an outline of what the future looks like from the point of view of these radicals. Basically, Abu Musab as-Suri focuses much more on oil. And he says, and I'm just going to take one of his quotes here, he says, so the most important enemy targets in detail, first, the oil and sources of energy from the source until the drain. These are among the most important targets of the resistance. By resistance there, he means radical Muslim resistance. Oil fields, oil pipelines, export harbors, sea navigation routes, oil tankers, important harbors in their countries, storage depositories in their countries. In short, oil, is the life artery of our enemies. It originates from our countries, and we have to cut it off. Now, Suri envisions a new type of Islamic radical organization, one that's completely decentralized and is really only connected by the internet. It is not a top-down sort of organization, but one in which cells develop in various different countries. They only communicate with each other through the internet, and they plan, carry out operations, and essentially self-destruct. Suri really envisions just about everything as more or less as a suicide attack. In other words, that there would be nobody to clean up afterwards, there would be nobody to interrogate, and each operation would then complete an organization. Now, this particular paradigm has been highly attractive to radicals online. It remains to be seen to what degree it will be implemented. One usual example that's given of it, for example, is the London attacks of July 2005, in which all the members of the cell ended up killing themselves. But so far as the oil industry, the only examples that we can give of it are really in the Yemen. So let's take a look at the individual fields of conflict that where we can find radical Muslims operating. Far and away, the most important is obviously Saudi Arabia. The revolt there by the Saudi Arabian branch of Al-Qaeda has clearly failed for a large number of different reasons, one of which is the excessive use of suicide attacks that have killed Muslim civilians and has essentially caused the organization to lose all popular support. But that does not necessarily mean that radical Muslim organizations in the Arabian Peninsula have been killed entirely. They have definitely been able to survive in a place like Yemen, which is largely lawless and where the government operates in something of a agreement even with radicals in which they let them go from prison. You guys might have noticed this happening recently, where oftentimes prominent radicals are simply allowed to walk out of prisons and so forth in return apparently for their cooperation with the government, or at least their silence. But that has not prevented numerous attacks from Yemen. Yemen's not a major oil producer, although it does produce approximately 330,000 barrels a day. But definitely the radicals have targeted these refineries and so forth in the Yemen. Iraq is a field that has never really fully recovered from the invasion of 2003. And it's been frequently targeted by radicals. I know that that'll be covered by other different speakers, so I won't go into it in depth. Several different other places that we need to consider. Algeria and Libya, both areas have prominent radical Muslim groups that work towards the overthrow of the government. Principal problem with regard to Algeria is simply the fact that the oil reserves are at a considerable distance from the areas where the radical Muslims command support, in other words, in the north. However, it should be noted that there are Al-Qaeda and ideologically affiliated cells that are scattered throughout the Sahara Desert. One should note the recent attacks, for example, in Mauritania, and there's definitely cells that operate in northern Mali. So it's possible that some of these cells could strike across the border into Algeria. Other African countries that are important, we can highlight the Sudan most especially. The Sudan is a country that's very clearly split, Muslim-Christian divide, and most unfortunately, the oil reserves are located right at the divide. Now, in 2011, when Sudan has to vote for whether the South secedes in a plebiscite, which I consider to be highly likely that it will vote to secede, I consider it very possible that there might be a civil war at that particular point, in which case the Sudanese government has demonstrated propensity to activate various different mujahideen to attack. And since the oil industry is located in a highly vulnerable place, I think that Sudan is an area where it's very likely that there will be attacks in the future. Other different foci, we can speak about Central Asia. Central Asia has really only one area that where a radical Muslim group is in reasonably good position, which is in Uzbekistan. Once again, however, geography pretty much militates against radical Muslims being able to utilize attacks against the oil and gas industry there, since most of the oil and gas industry is in the west, whereas most of the radical population is in the east. So far, they have not been able to carry out any attacks. The last area we have to speak about is Indonesia. Definitely, the local radical Muslim group, Jamaah Islamiyah, has been severely weakened over the last 5-6 years with the arrest or killing of most of its higher leadership. But when we look at its tactical planning, we can note that in several different occasions they have included either attacks against refineries or possibly even attacks against tankers as possible targets that were rejected at that earlier in 2002 and 2003. Therefore, it is possible that in the future, if this group is allowed to grow again and redevelop itself, that those might be utilized once more. So with that, I'd like to conclude.
Okay, very good. Thank you very much. So our next presentation is Dr. Ken Metlock, who is our other senior energy fellow here at the Baker Institute. Ken, before he was at the Baker Institute, was the head of corporate analysis for El Paso Corporation, worked on the National Petroleum Council study on North America gas, and he has been working with Dr. Peter Hartley to develop a model of the global LNG market, and he's going to talk today about Russia.
Are we on time? Okay, so thank you for the introduction, Amy. As she mentioned, I'm going to talk to you a little bit about the future of Russian natural gas exports. Now, that doesn't mean that the talk will be all-encompassing, because there are actually several scenarios that we have not presented here that we are investigating and will be presented at various venues sort of later this year, actually. So I'll be happy to talk about some of those, and I'll probably touch on them a little bit as we near the end of the presentation. Anytime I do a presentation that involves the use of the Rice World Gas Trade Model, I like to use this picture because I think it's very telling. What we see here is a composite of satellite photographs on clear nights around the world. And so you can see on the continents various places that are very well lit. These places where the lights are on are indicative of where energy demand is the highest around the world. The other thing that we see in the picture sort of superimposed on top of all these continents in various places are blobs of color. So these blobs range from red all the way down to a very sort of dim blue in the picture. What these blobs of color represent are intensity of natural gas resource. So this includes not only reserves, but estimated potential resource in place. The brighter the color, the more intensely endowed the region is with resource. So the picture is very telling in that it tells us a lot about the way natural gas markets might shape themselves as we move into the future. In particular, the blobs of color, especially the really bright red regions, are nowhere near where the lights are on. So it sort of tells a story in itself that it's likely we'll see pretty rapid development in international natural gas trade as demand for natural gas continues to increase. The other thing, and the reason really it's important for this particular presentation, is you'll notice the regions with the biggest, sort of brightest, most massive blobs of color are all in Russia. And that's very telling because when we think about the development of a global gas market, it really highlights the importance of Russia, not only in providing supply to the globe in general, but also the role that Russia can potentially play in arbitraging price differentials in the Atlantic and Pacific basins. So, real quickly, I'll go through a couple of slides describing what the model is and then sort of move into the scenario results. There's a lot more detail online regarding the model itself, as well as in a paper, a chapter in a book that was recently published, I guess it was 2 years ago now, as part of our Geopolitics and Gas study that was joint with Stanford. But basically, it's a dynamic spatial general equilibrium model. It uses expected prices to determine what the optimal investments will be, not only in developing reserves, but also in developing capacity to move those reserves to market. So the model develops liquefaction capacity, it develops shipping capacity, it develops regasification capacity, it develops pipelines. It basically solves for the optimal rate of investment in natural gas to meet demand at a price that supports the investment. So obviously one of the things that comes out of the model is regional prices, regional flows, and the associated capital investments. What we typically do with this model is we run it in the reference case that I'm going to show you in a few minutes. We run it assuming that only economic considerations drive the outcome. What that does really is it provides sort of a low case, if you will, for what the price of natural gas ought to be in that particular situation. The reason that's informative is because what we like to do then is layer particular constraints on the system. So for example, if the model likes to develop a Northeast Asian pipeline grid, what if we prevent that from occurring? What does that mean for regional flows and regional prices and global flows and global prices? It helps us to quantify, if you will, the cost of that particular constraint. Supply, this is a resource-driven model. A lot of the supply data we use comes from the World Resource Assessment that was published by the USGS in 2000. That's the initial publication. Some of those assessments have been updated periodically through today. I think the most recent assessment update was in Latin America. But some of it still is dated, so what we try to do is look to other sources, especially when new discoveries or new finds come into the fore, such as the gas that was discovered in the Nile River Delta in Egypt once exploration really began in earnest there, because that's really missing from the World Resource Assessment from the USGS. So we pay very close attention to the press regarding these issues and try to verify some of the numbers that we actually use in that way. All of the costs associated with developing resource really came from the North American natural gas study that the National Petroleum Council was involved in 2003. There were various resource development costs that were used in that particular modeling exercise that we have since taken, mapped those into geologic characteristics of the various plays in North America, and then used that map to construct costs for various basins around the world. So it really is a resource-driven model. Demand, and one of the things you'll see on the third bullet there, There are over 280 regions defined with regard to demand. And actually in the latest iteration of the model, that's grown a little bit. But the reason we have to sort of specify things in such detail is because we try to understand all the possible arbitrage opportunities that may exist either via pipeline or LNG, and how that might influence future gas flows. So what you might do is sort of think about the current pipeline networks that exist in North America and in Europe, and if you're trying to model those networks accurately so that you get a decent representation of what gas flows look like, at least historically, you need to site demand appropriately on the grid. So there's a tremendous amount of detail in the model. Transportation, in some cases we have to aggregate things into corridors. And a lot of that really is dictated by a lack of data availability, in particular with regard to how disaggregated demand might be along the system. So every now and again we'll come across some new data that allows us to actually split some things apart, and so you see some disaggregation occurring over time. So one of the points here is this is a constantly evolving model, if you will. So the reference case, just to sort of jump right in. There are a couple of things that really fall out, and really the first four main bullets highlight the role of geography and geology in what the model predicts. North America becomes the largest LNG importing region in the world. And that really is a function of geography and geology. Geology, because most of the production, especially from conventional plays in North America, is in mature basins that are nearing or at decline. Other continental sources of supply might include coalbed methane or shale gas. And admittedly, in this particular iteration of the model, some of our shale data is a little bit suspect, quite frankly, because that is an emerging frontier play in North America, so that's something that we obviously keep an eye on. But what this means, since North America is not connected to a massive amount of continental sources of supply, that as demand grows, it has to look outward for supply. And the way it does that is it accesses LNG markets. The Middle East becomes an incredibly important supply region. You might recall in that composite of satellite photographs that I just showed you, one of the biggest, brightest red spots was right in the Middle East. And the Middle East is also situated pretty much equidistant between North America and the major consuming markets in Asia. So they're very well suited to serve markets around the globe. And because of the massive amount of resource and because of the geography, we actually see in the models runs that we execute, they begin to capitalize or monetize that resource. Russia is and remains the dominant exporter in the global gas market. A lot of what happens, and we'll see this in just a second, you do see some declines in the older Western Siberian fields, and that affects Russia's ability to export gas to Europe. But emerging markets in Asia and the development in the reference case of a pipeline grid in Northeast Asia actually helps promote significant expansion of exports east. And so along with those exports, you must have growth in production. So Russia tends to gain market share towards the Pacific Basin, where it loses a little bit of market share towards the Atlantic Basin. So what do we see here? We see that reference case demand is actually growing fairly robustly globally at about 1.8% per year. The strongest growth is, of course, in the East, in the Far East, and in South Asia. Supply, very diverse set of suppliers. The reason I'm going through all of this reference case results like this is because it's going to help you to understand how the model actually adjusts the various sensitivities or the various constraints we place on it. And this one in particular really highlights that point. There's a very diverse set of suppliers and demanders in the global global natural gas trade. So as we move forward. And with regard to LNG, you actually see that the Middle East collectively becomes incredibly important. Interestingly, Australia is the largest single LNG exporter globally, has a lot to do with the massive amount of resource and the very low demand that actually exists in that country. And you can see there as well on the very bottom that North America becomes the primary point of destination for LNG. How does LNG emerge? Well, you can see here that it becomes a pretty significant share of all gas that's traded internationally. Pipeline flows definitely increase but you also see that LNG flows are increasing much faster and approaching 45% of total gas trade internationally by 2040. This, again, is very important because it helps to underscore some of the responses that I'm about to take you through when we look at, I think I just went the wrong way. Look at what happens with constraints on Russia. Russian supply in particular, you can see in the dark blue right there are declines in the west. However, there's a somewhat offset by growth in production in the east and other regions in the west. Natural gas exports tend to decline in the near term, and a lot of that is tied to the very rapid pace of demand growth that we're seeing in Russia right now. A lot of the major growth out of Russia, that big red chunk at the top, is growth to the Far East in terms of exports that I talked about just a second ago. The major points of destination for Russian gas, European imports and Northeast Asian imports, you see in the two graphics here on this particular slide. In Europe, diversification is sort of a natural economic outcome. A lot of the movement that we've seen that is sort of motivated by energy security really can be justified on economic grounds alone. And the basic story is this. All of the major trunk lines that move from West Siberia into the former Soviet states and then onward into Western Europe, those are really developed under Soviet era type economics. Those were not sort of market outcome type capital investments. So it's difficult, for example, to justify or think about any single developer in North America, for example, laying 5 60-inch pipes in a corridor right next to each other, serving a particular market without a real anchor load customer at the other end of that. And that's a lot of demand that would have to be generated to satisfy that. So what you have happen is you start to use that infrastructure, and all the fields behind those infrastructures begin to decline, and you've got to make new investments in Western Russia to keep that infrastructure full. One of the things that happens, though, and I'll just sort of briefly tell you, the three scenarios we looked at before I get into that. What happens if the resources in the Yamal Peninsula and the Kara Sea do not get developed? What does that mean for Russian gas exports? What happens if Russian exports, and Amy touched on this in the introduction to the summary of the study, what happens if Russian exports are severely reduced in 2010? And then the third scenario that we looked at in this particular set of runs was what happens if the Asian pipeline infrastructure that's developed in the reference case does not get developed? With regard to no Yamal or Kara Sea development, there is a pretty large change in production in Western Siberia as a whole. You actually see that relative to the reference case, production in Western Russia declines significantly. Now, there is some offsetting increase, in particular in the Ukraine, in Norway, and in other parts of the world, as that supply is actually removed from the marketplace and prices are typically a little bit higher. The exports, which you can see in this particular picture, to the west suffer tremendously. Some of that is offset, however, by growth in exports to the east. What happens there, and this is sort of highlighting interconnectedness of the global gas market, as exports to the west fall, European consumers turn to LNG to meet their demands. That drives up competition for gas on the water, if you will. Okay? So what that means to consumers in Asia is that the price is slightly higher. And so in the reference case where we haven't constrained Eastern Siberian and Sakhalin gas developments, that actually incents more of that gas to move into Northeast Asia. So that's what you see in this picture. The second scenario where we see a cutoff of Russian exports in 2010, basically what we did is we operated under the assumption that Russian exports would be suspended for the equivalent of 6 months in a particular year. Amy showed you what happens to price. It more than doubles actually in Europe. Some of that is mitigated by expansions in production in the Ukraine and in Norway in particular. Sort of they bring capacity online very quickly to sort of compensate for what happens. But one of the most interesting things about this particular scenario is that once those investments are made to offset the lost production from Russia, even in that very short run time frame, Russia loses market share in Europe for at least a decade. So you can think of this particular action as sort of shooting yourself in the foot, all right? What happens, it's not only the supply response from the continental suppliers such as Ukraine and Norway, but the European market turns more heavily to LNG as well in the long run, and it takes quite a bit of time for Russian gas exports to actually recover, as we see in this particular picture, from that particular action. Okay. The other thing that you see here is a lot of the, what we've termed in some of the slides and in the paper is east of Caspian, so that's Turkmenistan, Kazakhstan. A lot of those exports actually dip too in this particular case because the gas that's produced there is really captive to Gazprom infrastructure. So the actions in that particular case actually have ripple effects for other producers in the region. And then the third scenario is what happens if Asian pipelines remain undeveloped. You can see here that there's a pretty diverse set of supply responses. The biggest supply response, of course, is the reduction in Russian production. Now, I'm going to show you in just a second that Russian exports actually fall by more than this, to the east, that is. But that's somewhat offsets, or that is somewhat offset by increases in exports to the west. What happens there is basically by not developing pipeline infrastructure in the east, longer term you're effectively stranding those resources. And as demands around the world grow, infrastructure is developed to tie into existing infrastructure that moves gas from West Siberia, and that gas eventually begins to flow to Europe. That tends to have a ripple effect longer term that sees more LNG flowing into Northeast Asia, less LNG flowing into Europe, more pipeline gas from Russia flowing into Europe. So this is an interesting scenario in that it really highlights the role that both East and Russian resources can play in sort of balancing the global marketplace. So in conclusion, I'm trying to get through this as quickly as possible. What we find actually is that Russian supply to the EU in general remains incredibly important. Even with the supply disruptions and the reciprocal impacts with regard to exports to Europe, Russia maintains a pretty strong market share in Europe. Even with the scenario where we don't see development in the Yamal Peninsula or the Kara Sea, Russia maintains a pretty strong export market share into Europe. Some of that is facilitated by an increase in imports to Russia from Caspian states, which then moves onward west. That it basically that increase in production from Turkmenistan and Kazakhstan really helps Russia maintain its contractual obligations for delivering to customers in Europe. So constraints on exports in either direction really instigate supply responses and also flow responses. LNG really is the swing in the marketplace. So as you can imagine, the Middle East plays an incredibly important role in balancing the marketplace in response to what happens in Russia. That actually brings up a very important point, which you see down there in the very last bullet, the second sort of subheading there. What if we have a situation where Russia and producers in the Middle East coordinate production policy? That's actually something we're investigating currently, because potentially, given the role that the Middle East producers play in all of these scenarios, that could have a much wider reaching impact in terms of price response. The other thing that we're considering is what if you had forced infrastructure development? So one of the things that's obviously been in the press a lot lately is Russia's movement with regard to the South Stream pipeline. A lot of people, and I'm actually one of them, view that particular announcement really as a competitive engagement with the developers of the Nabucco project. Because the South Stream pipeline basically bypasses that particular transit route and takes all of the market that Nabucco is targeting. So if you can get in first with South Stream, you basically hold captive all of the Caspian gas because it makes Nabucco a dead project. You hold all that Caspian gas captive to your infrastructure and you keep those pipes full. So in the base case, in the reference case models, South Stream never is built. So one of the things we're actually considering, what if you just assume that cost is sunk and you throw the infrastructure in, say it's a government policy, what does that do to the flow of gas in the region? I think with that I'll stop. So.
One question. Scenarios that you have considered, did you consider that for some reason the imports from Turkmenistan, if it were to stop, what would happen?
Imports from were to stop? Not in these particular scenarios, no. No, it's Yeah, I understand that's something that people think about, but the recent agreement between Russia and Turkmenistan that gave Turkmenistan pretty favorable pricing on their gas, I would say, in the near term anyway, I don't think that's very likely. It's more likely, and I think we saw this, Turkmenistan stopped shipping gas south to Iran, so. Yeah, that's actually an interesting one. That's another one that we've struggled with a little bit. Domestic prices in Ukraine are heavily subsidized, and that's really prevented a lot of domestic supply development. The USGS resource assessment for the Ukraine, there's three basic plays in Ukraine. One's on the Black Sea, one's up in the Dnipro-Donetsk basin, and then one's sort of west as you sort of approach, I guess it's Romania. That total assessments is about 45 trillion cubic feet. And about 75% of that is available at today's prices. So if you were to sort of equilibrate domestic pricing with the rest of prices in Europe, it's very arguable that you would see a pretty dramatic supply increase from Ukraine. Now, given that domestic prices are subsidized and it's unlikely that that's going to change anytime real soon, then maybe that supply response that you see in these particular scenarios is a bit overstated. So,
I think the numbers they quoted about the Ukraine are at least 3 times too high.
That I've quoted?
Yeah. Considering that all they have is just very, very lean trains, Dnipro-Donetsk and the Carpathian. The Black Sea plains, the Ukraine is even leaner.
Well, I've
Ukraine,
actually heard in the Black Sea there's interest on the part of various Western corporations. They're looking. It's basically a look for oil, but in the Ukrainian Black Sea, there's a lot of interest in engaging in exploration there because there are some geologists that think the numbers that I just quoted are actually low. So obviously there's a tremendous amount of uncertainty on any of these things, any of these assessments, but what we typically do is use the P50 estimate. So,
does your estimate include the amount of gas that Ukraine is tapping into the Russian pipelines and taking it out without paying?
Well, the resource estimate is a resource in the ground, right? What's actually happening above the ground affects gas in Russia primarily, right? Because it's gas that the Ukraine is importing from Russia and then ultimately re-exporting. So what's not being consumed. So all of that's actually part of the model, yeah.
Does India change the Russian arbitrage if they start increasing their demand and building more gasification production facilities?
No, because actually what happens is both Russia and the Middle East play a very important arbitrage role. I think, Amy, you and Ron had a paper on Saudi price discrimination with regard to oil markets. And it sort of raised the issue, why doesn't Russia try to export more oil east, right? And I think the same thing can be said with regard to gas. If you have both players competing in both markets, then it's going to be difficult for any one player to really game the system. So with regard to India, there are a lot of things that actually happen in India. The model, the reference case typically likes to build a pipeline from India, from Iran. So that's obviously full of political uncertainty. But one of the things we have done in the past is look at scenarios where we don't allow that development. It turns out that LNG from the Middle East is a very close substitute to pipeline gas from the Middle East into India, so it doesn't really affect the outcome that greatly.
Very much.
Sure.
Okay, we're changing topics now. We're going to have a presentation from Professor Daniel Brumberg on Iran. He is Associate Professor in the Department of Government at Georgetown University and the Acting Director of the United States Institute of Peace Muslim World Initiative in the Center for Conflict Analysis and Prevention. He's written numerous books on the subject of politics and social change in the Middle East. Dan? You guys might remember him as the author of the NIOC case study.
Well, thanks very much, Amy. I'm delighted to be back here. I'm actually an Arabist by training, And a few years, or more than a few years ago, I found Iran to be a fascinating place when I was a graduate student at the University of Chicago. And then afterwards, I wrote a book on Iran. My current work is mostly on the Middle East, in fact. But I was saying to Amy before, like in the third series of The Godfather, they keep bringing me back here to do work on Iran. And actually, I'm delighted to do so because it really keeps my head in the Iranian scene and compels me to keep abreast of events, but also try to make sense of them, which is what we're trying to do here today. Amy, how much time do I have, roughly? Just 20 minutes. Okay, thank you. I have contributed a small part to a very complex paper, and I want to congratulate all the seamstresses who wove this fabric together. It's really quite an extraordinary achievement. I think the paper reads very coherently, given the fact that you had multiple authors. My job this morning will be to summarize some aspects of my contribution to that report. And as I understand, I'm coming up to the podium a second time this afternoon. And what I'd like to do, Amy, with your permission and that of our colleagues and friends, is elaborate on some of the policy implications a little later on in the day and sort of very quickly unfold for you the basic gist of my analysis. And the analysis, basically the theme, the thesis, is that in many respects, Ahmadinejad and his allies in what I call the populist camp, sometimes referred to in Iran as the principalists, have overreached, have antagonized key players in the Iranian political arena, particularly what I call the pragmatic conservatives, and have done so in a way that will probably elevate the prominence of the pragmatic conservatives in a way that will limit the damage already done by the populists, and perhaps, as Amy was alluding to a little while ago, open up opportunities for addressing our main issues of contention between the United States and Iran, particularly on the proliferation question, the nuclear power, Iran's drive for a self-sufficient and independent fuel cycle. And in saying so, and Amy had the up on the big board here a little while ago, a paragraph inspired by my paper, in which I argue that in some sense, and perhaps counterintuitively, the sanctions have made a difference in the Iranian situation, not because they are compelling Iran to say uncle and to basically accept what we demand. That will never happen. But if we think about sanctions in a more nuanced and political way, what sanctions have done is facilitated paradoxically, and this is a point that doesn't come across closely enough in my paper, on the one hand, sanctions have, as they always do, encouraged monopolistic behavior and opened up space for Ahmadinejad and his colleagues to take advantage of opportunities because of the shrinking pool of investment opportunities. At the same time, there are a lot of groups that have been hurt by such events, and particularly the pragmatic conservatives, and they have been extremely vocal, explicitly, in the contentious arena of Iranian politics, and making it clear that their interests have been affected negatively by sanctions. And because their interests have been affected negatively by sanctions, sanctions offers a possible lever to affect the political game in Iran, providing, and here's an important point, Amy, that I really think we need to emphasize, providing that the sanctions come with credible carrots, credible incentives. And what is lacking from the Washington perspective, and here I want to say that my remarks do not reflect the position of the United States Institute of Peace, which has a budget line in the Congress. Without credible incentives and carrots, the political advantages of sanctions gained, the leverage you gain in the Iranian political scene is quite undercut. And what we're lacking in Tehran or lacking in Washington so far is the political will to decide that we can live with this regime in Iran on some level, some basic level. We want to, under different conditions, we will live with it. I still think that there's a real ambivalence in the Washington body politic about accepting a fait accompli that was accomplished quite a few years ago. Now, what has happened to sort of propel a kind of backlash against Ahmadinejad? My paper makes the argument, and those of you who follow Iranian politics will certainly find nothing new in this. The Iranian body politic is not a despotic political regime, as it is sometimes characterized. It is, if you like, using an academic term, a neo-populist, neo-patrimonialist regime that thrives by allowing players into the political game through a system of managed consensus and managed conflict, whose ultimate balancer, whose ultimate arbiter is the supreme leader, aptly named, in this case, Ali Khamenei. And the way the game is played is that these various groups and factions are played against one another. And the rule of the game is they're allowed in so long as they don't overstep a red line, advance too many interests, advance too much power in ways that distribute the whole equilibrium of undermine the whole equilibrium of the political system by overreaching. And by, in effect, undercutting the authority of the supreme leader by suggesting that they are managing the show and not him, okay? Now, the first political leader to overstep this line was a man named Khatami. Clearly, from the perspective of the regime, Khatami, in advancing an agenda which, while reformist in many of its ideological and political precepts, really questioned the whole premise of the Islamic Republic, and that sort of threat brought a kind of coalition of forces together against the reformists, a coalition that brought what I call the populists and the pragmatic conservatives together, essentially to tame Khatami and put him in his place, with the support, of course, of the supreme leader. And so that was the first readjustment of the political system and a re-equilibrium of the political system. And the second round of this fight is with a new president. His name is Ahmadinejad, and it's essentially he is overstepped. How is he overstepped? And the paper addresses three ways in which he is overstepped. He is overstepped, number one, by talking about the return of the 12th, the Mahdi, the Imam. There was a piece in the New York Times about this. It's so propitious, Amy. I'm delighted when I have a piece written for you, and then suddenly there's a piece in the New York Times about the very subject. Let's talk about this messianic figure, this return of this 12th Imam. Apparently, Ahmadinejad really believes in it. It really scares a lot of your more pragmatic conservatives. It's not a kind of rational discourse, and it really, really ticks off the higher level clerics, because that's the kind of talk that's not reserved for non-clerics, and even among the clerics, only a few clerics are allowed. Khomeini used to talk about this, but most clerics don't even talk about this issue of the return of the 12th Imam. And here is this upstart president running around saying that when he was in New York at Columbia University, the 12th Imam was with him, helping him in his speech and so on, and supporting Iran. I mean, people turn around and say this guy is nuts, and in fact, perhaps he is a bit nuts. This really antagonized the rationalists, if you like, the people who are worried about things like economic investment. Khomeini was famous for having said, the revolution was not about the price of watermelons, right? The revolution was about some sort of basic existential cry of identity, and in some sense it was, and Ahmadinejad was basically sort of echoing that perspective at the same time, of course, that Ahmadinejad was saying that the price of the revolution was about watermelons. It's about addressing the economic interests of the mustasafin, the disinherited. And it's very hard for Ahmadinejad to put these two pictures together. All this talk about this messianic figure really antagonized the clerics, and I'm sure it antagonized the supreme leader as well. He's really the only person in the Iranian body politic who can allude to this issue of this messianic figure. So that's the first thing. The second thing that really antagonized what I would call the pragmatic conservatives was the economic policies of Ahmadinejad. The inflationary consequences of all this spending. I mean, there are 100 Ahmadinejad jokes in Iran right now. I mean, they proliferate, which is an apt word for today's discussion. And they proliferate because he's made so many stupid decisions, some of which are purely laughable, but others of which have a real economic cost, particularly for the kind of mercantile, more advanced, more internationalist element of the bazaar. The bazaar in Iran is often discussed as this homogeneous kind of traditional economic arena. It's very complex. It has its own contradictions. It has its own different camps. And one of the camps is a kind of more internationalist, forward-looking camp that has an interest in foreign investment and has an interest in removing Iran's isolation. Rafsanjani is one of the leaders of this camp. And this camp also has an interest in making sure that the Europeans and the United States are split, and that the advantages provided, in part by arenas for banking and so on, by the Europeans are not undercut. And there was a sense that, in so many ways, the economic policies of Ahmadinejad, his rhetoric and so on, really was facilitating and doing the job of the United States. Ahmadinejad was, in effect, doing the job of the United States by pulling the Americans and the Europeans together and maintaining them on the same page, particularly on the third issue, which is the nuclear question. And on this question, because Amy, are we going to get there? This is really crucial because everybody in Iran will agree that Iran has a right to, under the treaty, of course, to develop its own enrichment facilities. This is a matter of Persian pride. This is a matter of Iranian pride. And on that page, 99% of Iranians all agree. But beyond that, how to get there and how to push this objective and what its strategic benefit is, the Iranian political elite does not agree. And this is the third issue on which Ahmadinejad got himself in a lot of trouble. Because by, in essence, coupling his defense of Iranian rights, and I cite his speech before the UN as an example of sort of the rhetoric, the quasi-nationalist rhetoric that the Iranians use, besides that sort of conventional rhetoric everybody agrees with, it's a matter of respect, it's a matter of collective dignity, these are kinds of the psychological underpinnings which I think are very important to this claim, he attached lots of other sort of demands, or such as destroying the regime in Israel. He doesn't even know the Zionist regime. It's in Farsi, it's an obscure sort of term. He really doesn't talk about destroying the state of Israel. He always talks about the Zionist regime. I think the Israelis don't quite parse these distinctions. They feel somewhat uncomfortable about the very pronouncements, as they should. But what's interesting is that the kinds of radical rhetoric used to defend the nuclear agenda by Ahmadinejad and his allies was a rhetoric that was openly attacked by the conservatives in the parliament and other institutions. And what happened in 2006 and 2007 was essentially a backlash against Ahmadinejad, particularly by the pragmatic conservatives, and also, and this is crucial, perhaps doesn't come across as strongly as it should in the paper, a defection from the ranks of Ahmadinejad to the pragmatic conservatives, to Rafsanjani, Kalibaf, and his allies. Let's make one thing perfectly clear. For analytical purposes, it's important to distinguish between these camps. In actual pragmatic empirical purposes, these camps, particularly between the pragmatic conservatives and the populists, intermingle at the edges. And they're constantly going back and forth, there are constantly defections back and forth from one camp to the other. We have seen, and I'll give you two clear examples, Larijani, former lead negotiator for Iran in its talks with the United States and the West over nuclear weapons and energy and so on, compelled to resign, replaced by a close populist, a close ally of Ahmadinejad. Well, Larijani was in a sense in the populist camp for a while as well, but we saw in 2001, 2002, before Ahmadinejad, a slow drift of some of these populists into the conservative camp. Ahmadinejad's policies accelerated, particularly on the economic level. There was considerable open debate in the parliament. This is an important arena where there's actual real debate. I mean, if you're an Arabist and you work on Arab politics like yourself, you don't usually go to the Majlis in Egypt to see real debate. Forgive me, my Egyptian colleagues are here, but in Iran it's a different matter. You have substantive debate about economic policies, and Ahmadinejad was assailed for the political and economic consequences of those policies, and so you had a defection of some of his closest allies in 2006, 2007 to the Rafsanjani pragmatic camp, and this process was accompanied by a consolidation of if you like, pragmatic conservative power into several institutions, one of which is the Council of Experts. The Council of Experts is this 86-plus member body whose purpose and job and mission is to select the next supreme leader. There was a fierce contest within the Council of Experts, pitting Rafsanjani against the allies of Ahmadinejad. Ahmadinejad's allies lost. Rafsanjani is now the chairman of the Council of Experts, and they love councils in Iran. It sounds like the former Soviet Union, but Rafsanjani is now the chairman of the Expediency Council and the Council of Experts, two powerful institutions, and this then all anticipated the recent parliamentary elections, in which, roughly speaking, it's very hard to get a clear read on, or precise read on the election results, but the parliamentary elections essentially brought a faction supporting the principalists and Ahmadinejad, a faction supporting the pragmatic camp, and 10 or 15% went to the reformists, and about 20% or so out there as independents. It's clear that there is a rough balance of power in favor of the conservatives, and assuming, as I say, some sort of consultation between the conservatives and the reformists, who prior to this were at each other's throats, but have learned better, I hope. I think that we'll see a real challenge to Ahmadinejad and his allies. Ultimately, that's a challenge that will be arbitrated by the supreme leader. His position will be that no one camp can overstep its boundaries. He's going to try to maintain a balance of power between them. The pragmatists also have to be very careful not to antagonize and cross their own red lines. But I think in this sort of process, we're setting the stage for the next element, and that is the election of a new president. My guess would be that the chances right now is at least 55, 60% that Ahmadinejad will be reelected, because if he would step down or lose an election, it really would be symbolically seen as a kind of defeat for the political system. And I'm not sure that the supreme leader would want to see that happen. But Ahmadinejad has antagonized so many key players, particularly around the economic and nuclear issues in Iran, that it's not inconceivable that we'll see Kalibaf, who's the mayor of Tehran, the position that Ahmadinejad previously held. It's not inconceivable that we'll see a major challenge and perhaps a victory, and that would open up a return of the pragmatists in a significant way, and possibly return the possibility of negotiations between the United States and Iran. I'm going to end on this note so we can really focus on questions, and I will elaborate some more of the policy implications of this analysis later on. But I want to say that on the nuclear question, there really is an interesting sort of divergence of opinion between the principalists. The word principalist, by the way, in Farsi is taken from the Egyptian, or from the Arabic word usul, meaning rootedness, fundamentalists. The principalists are people who are rooted in the fundamentals of the revolution, and they see themselves as defenders, upholders of the ideological purity of the revolution. These principalists see the nuclear question as a strategic matter on which there can be no compromise whatsoever. That is to say, it's not a bargaining chip. It's not something that can be dangled out there in the context of a grand bargain that can then be bargained between the United States and Iran in ways that will redefine what the purpose of nuclear energy is, and of course implicitly nuclear energy for offensive purposes, for as a weapon, in the context of a solution that is mutually acceptable to Washington and Tehran. That is not something that the principalists would accept. They're going to go for this come what may. That really worries the pragmatists, Laranjani, Rouhani, others, for whom the quest for some sort of implicit nuclear capacity for offensive purpose, the idea is to maintain strategic ambiguity. You never declare. You just go as far as you can, and you don't want weaponization. All this talk about Iran and weaponizing and so on was really off the mark, as far as I'm concerned, as far as I understand it. What the Iranians want is get really close, because delivering the weapon is not so complicated at the end of the day. You get the delivery systems. The weaponization can be done pretty quickly. What you want to do is get the enriched uranium, and then be in a position of letting your enemies worry about what's going on and what your ultimate intentions are. That's what the Iranians want to do. It's very smart politics. And for the pragmatists, that's what they want. And in the context of moving that direction, they will use that movement as a strategic lever in their bargain with the West, to open up Iran's isolation, to have its position in the Middle East declared acceptable, and so on, to be an accepted member of the kind of political game and strategic game in the Middle East. And so there's a real divergence of opinion, tactically and strategically, between these two camps about the purpose of moving to an implicit position of using nuclear energy for strategic offensive purposes. And there are a million ifs, I recognize that. If, in fact, we get a new president, if the pragmatists are able to coordinate with the reformists, if Ahmadinejad is isolated, if the economic consequences of his policies continue to hurt the very constituency that elected him. That's really important to keep in mind. What happened in Iran and Tehran in the 90s was there was this process of spontaneous privatization, where a lot of the homes that had been taken over by the new class of kind of middle class political operatives were then privatized by these operatives. They were taken, and Iran and Tehran saw this housing industry, this boom. If you own property in Tehran right now, you're in really good shape. But what happened is, so you had a new class actually created by the regime in the 80s that benefited from all this, and then another class that didn't. And this was the class around Tehran, the outer circle, and in the countryside, and also the class of members of the Revolutionary Guard, the Pastaran. There are lots of groups that didn't benefit from these sorts of transformations, and they're the ones who were sort of collectively brought under the umbrella of Ahmadinejad, and they're the ones who are now engaged in a political and economic struggle with the beneficiaries of the transformations of the 80s and 90s. And my sense is that that struggle opens up opportunities for a more nuanced, if I may say so, foreign policy from the United States, providing that there is some basic level of political will in Washington, to put it bluntly, to engage Iran and find credible and real solutions to our problems. Thank you. I'll leave it at that and then open up for questions.
Yeah, I have a quick question about the Pastaran. You're sketching out a picture briefly that essentially they will fall in line more with Ahmadinejad, so the more radical elements, and not stay under the sway of the conservatives, the more traditionalists in the country. Is that?
Well, no. I mean that's the typical thesis you get now is the Pastaran has used the opportunity, and this is something I discuss in the paper. I don't have much time to talk about today. This so-called process of privatization that's taken place through the amending of Article 44 of the Constitution, opened up opportunities for new elements within the body politic of Iran, essentially, to engage in this process of privatization. And the Pastaran is buying into this process by using public funds to purchase shares in a lot of it. And so, yeah, it's been it's been well publicized in the media. But what's going on in this process is the Pastaran, I argue in the paper, for the Baker Institute, is buying into the political system. They're not taking it over. They're becoming a stronger player, but that doesn't mean that they're becoming the dominant player. They are simply interjecting themselves. And in that sense, and many of my Iranian colleagues would agree, those who follow Iran closely, these elements are being sort of co-opted into the political game. So Ahmadinejad could talk all he likes about mounting this struggle against so-called corruption. But when the time came for his allies to get corrupt and to buy into the political system, that's exactly what they did. And now they're part of that system. Having said that, the Pastaran, the Revolutionary Guard, is not a homogeneous institution. Two leaders from the Pastaran are named Laranjani and Kalibaf, who are members of the pragmatic camp. They go back and forth. These are fuzzy boundaries. We use them for analytical purposes. They're important, but they're fuzzy boundaries. And the more normalized these players get in the economy, the more that their particular economic interests are related to moving away from isolation and incorporating Iran into a bigger political and economic arena, the less they will be susceptible to the kinds of rhetoric and radicalism that Ahmadinejad evokes.
I have a question relative to the religious aspects. I kind of have a sense that the Iranians are trying to position themselves as champions of the Shia, and then would be in conflict with the Saudis for dominance of the Islam, although they don't have the sacred cities. To what extent, I mean, is this a feeling of the general Iranian population that they are the champions of their oppressed brothers? Or
it is certainly not a feeling of the general Iranian population, whatever those feelings may be. I doubt it highly. In terms of the political elite, which matters a great deal, I think that the Iranians feel ambivalent. In that regard, I suppose I depart from Vali Nasr and others who sort of talk about this new Sunni Shiite sort of dynamic. One, certainly, I think, is more complex than is often suggested, because if you consider events in Bahrain, which are discussed in the paper, if you consider events in Lebanon, the Iranians don't want a civil war. in Lebanon. But they have a client or a partner, depending on how you see it, who's very powerful, that has a great deal of leverage, and if it were a real open and free election tomorrow, would probably come out on top on Lebanon. So the Iranians have this relationship that they have to protect. I see it more in political and strategic terms than religious terms. At the same time, they don't want a sectarian they don't want sectarian civil war. I think the same is true in Iraq. They have their allies, they're Shiites, there's a certain kind of religious resonance there. But at the same time, the Iranians want to have the cake and eat it too. They want that relationship, they want to have influence, but those players also have a certain degree of independence, won't listen to Tehran, and often overstep their hands from the perspective of Tehran. I think the recent bloodletting in Beirut, which is the worst we've seen in more than a decade, where elements of Hezbollah essentially went against Nasrallah's own promise not to attack Lebanese civilians and committed atrocities. Some atrocities were committed on the other side as well, of course. Really indicates a process that is no longer influenced or controlled by the Iranians. So they don't champion the Shiite sort of card out of a kind of basic sectarian sort of resentment over let's get even with the Sunnis. I don't think that's what's behind it. And certainly when it comes to Palestine, the relation with Hamas cannot be explained in those terms. So I see it in strategic terms, and I see it as a kind of double-edged sword for Iran, because the Iranians ultimately want to be seen as a leader within the Islamic community, not as the Shiite leaders. But at the same time, they have Shiite allies, and they have to defend them in somewhat sectarian terms. How do you square that circle?
Is there controversy in Iran over the role that Iran is playing in Iraq at either the factual level, exactly what are we doing, or two, whether what we're doing is a good idea?
You know, my paper surveys the debate in Iran on economic issues, the nuclear question, and messianism. I have not encountered a lot of debate in Iran about the Iraqi dimension, interestingly enough. It's interesting, and I may simply have missed it. I don't think it looms, strangely, paradoxically, it looms as much in the domestic debate as these other issues. It simply doesn't.
Last question, then I'm going to give you guys instruction for lunch.
How do you see okay, there's an offer on the table from the Security Council. So give us the movie between now and the elections on how that sort of
The minuet plays out by the Iranians talking about looking at it and then asking for an adjustment and then saying this part is not good, and basically playing for time. Because I don't see in either Washington or Tehran, well, these are the two capitals that matter most in this dance, that there's the political will now to take the risk required for sort of moving to some sort of solution or using that particular proposal you alluded to before as the basis for coming to some sort of serious negotiating strategy. I just don't see anything happening until we get elections in Tehran and elections in Washington. Actually, it's the other way around in terms of the sequence. And so I'm not optimistic that we're going to find any kind of common ground. I think that and I do think that the first at the first indication of such common ground, Ahmadinejad and his allies will engage in some sort of provocation whose purpose is to torpedo that effort. I point out in the paper, and the authors, this is reflected in the conclusions as well, that I think the United States has to tread very carefully and recognize that there will be an effort by Ahmadinejad and his allies to sort of exploit situations, particularly when they feel isolated and weakened, to advance their interests. And we shouldn't fall into that trap. We should avoid it. We should take cognizance of the complexity of the Iranian political arena. So I'm not optimistic about I think ultimately I agree, I suppose, with Ken Pollack in this case, and that is we're going to have to learn to live with an Iranian regime that ultimately is going to be using. Here, the paper clearly states that Iran's economic predicament, is a consequence of the political use of oil to essentially subsidize the political system, and that the drive for nuclear energy cannot resolve or alleviate that problem. I think that's not going to change any time in the near future, and that the Iranians are going to push for nuclear power to create this sort of strategic ambiguity I referred to before. And the question is, what kind of Iran do we have to live with? not whether we can stop this particular effort. I think that there already too much water has gone under the bridge already. The question is how to sort of deal with the strategic challenge of Iran in ways that produce a different regional sort of balance of power and lessen the threat imposed by Iran. I think that we're going to have to live with a lot of consequences that we don't find particularly palatable.
Okay, thanks very much.
Okay.